Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, February 14th. All right, well, we got another day up. And remember, we talked about this last week on Thursday and Friday. Daily charts are basically skewed when you have the markets gap up, stay in a range pretty much most of the day, and then short cover, small short covering rally going into the end of the day, pushing the markets higher. So intraday trading sometimes is a little bit difficult when you gap up like that because it does go sideways. The markets and price action pretty much go sideways, and then you get a little bit of a relief rally and a little bit of a short covering rally, if you will, at the end of the day. That's what we've been having for the last several days, and then we've been in a range. So going to have a little fun today. CNN Fear and Greed Index. You can go and Google that. It's a very good and reliable index. You know, sort of about the VIX, but there are several components in that. You can look at that on your own. It's a short video, so I don't want to get into it too much. But it's compiled of price momentum, price strength, breadth of the market, put call options, junk bond demand, market volatility such as the VIX, and of course safe haven demand such as bonds and treasuries and stuff like that. So there's a lot of components that go into this, and I wanted to show this to you because I've been following this Fear and Greed Index for quite some time, and it is pretty reliable because there are many components or true components that make up the Fear and Greed Index, and this is in CNN. So just Google CNN Fear and Greed Index. You have a lot of fun with it, and you can monitor it yourself. I mean, it is now at 74, very, very high. Obviously, 100 is extreme greed. A year ago, we were at 21, which is extreme fear. And as you can see, within a year ago, we had extreme fear, and all of a sudden, where are we from a year earlier? So pretty reliable stuff, good stuff, and I want you guys to get as many tools in your trader toolbox as possible to be successful out there. So fear and greed, 74%. Well, I knew it would have been high anyway, even if I wasn't following it, because the VIX is at a 10 handle, going back into a 9 handle, and you have a lot of these indexes, at all-time highs, making new all-time highs every single day. So where do we go from here? Well, I did mention and laid out some sort of a hypothetical timeline plan yesterday, and I mentioned, if you're given the 3 weeks that Donald Trump anticipated or basically stated he's going to announce his tax plan, and where we are today, we're on the 13th of February, that puts us probably into the second week of March. And remember, nothing is concrete. Remember, you're dealing with the market. Market changes on a regular basis. So what I was looking for is, and what I am still looking for this week is the Humphrey Hawkins testimony from Janet Yellen is today and tomorrow. You have a lot of CPI inflationary data that's coming out. It's going to complement that Trump rally or not complement it, if you will. And then we're going to see where we go from here. I would suspect at this point in time that we get a little bit of a bump down. Okay, and that's going to, again, I mentioned this yesterday, but I want to repeat myself because it's important. There's two ways that we can play this. Either we're going to get a bump down and we're going to get to the lower end of the range, which, matter of fact, let me get to that point now. Let me just run through a couple of these, and then we'll talk about where we think the market's headed. UUP putting pressure on gold, on precious metals, and, of course, crude oil and the grain sector. Now we're getting back up, but we just cleared that. 25.90. Next hurdle is going to be 26.15, and then of course the high of this consolidation channel. And you can see I labeled it inverted head and shoulders. We're back testing this now. Looks really, really good for higher prices. I would actually like to see it get right back into this right shoulder here. Hold the right shoulder and then get back up from there and start to make higher highs and higher lows. Same thing with the GLD. You can see that no change in the GLD. And bonds actually looks really starting to look shaping up into a nice bullish cup and handle, or even if you don't see a cup and handle here, a nice bull flag pattern. Here's that round bottom that you can see, and there's that handle right here. So to me, it looks like a cup and handle. Now, remember, if we lose this pivotal low here, this swing low, 118.39, we'll test this, and then we're back down again. I've been saying it. I do think we fill this gap at one point, and it could be this pattern here. This pattern, a cup and handle, at least gets us to the upper end of the range. If not fill the gap, at least get to the top end of the gap. So we'll see. And the only way this is going to work if fear comes back into the markets, and if fear does come back to the markets, like I think it will this week, this may get a relief rally here, okay, as well as gold again. Now, getting back to the markets, here's what I'm thinking. We have a small little wedge pattern forming within a big, larger wedge, okay? I think we get back, we maybe touch this 234, and then I'm going to show you the 60-minute. Matter of fact, let's get right to it right now. This is the 60-minute chart. We are on our fifth wave. This is a small little bearish rising wedge, which now is outside of the wedge, is probably going to be more like an uptrend channel, okay? Which looks obviously much better than the wedge because we broke out of the wedge. So that bearish rising wedge is no more, and now we're just at an uptrend channel. But let me show you this. I showed this to you yesterday. So we're here right on the 13th. I think we take this. It probably tags 233 and kind of rides along the rail here, okay, up until somewhere around here, the 8th. That'll put us somewhere around 238, 240, and that's when I think we would succumb to some pretty major selling sometime in March. Now, we have the rally would maybe even if we gap up tomorrow or Wednesday, and then I think we start to tag. I think we get down to the low of like 228, right up in here. That's a lower trend line. Hold within this uptrend line, and then bounce back up again. Get everybody short, and then the markets start to rally again, and that'll put the perma bears in that throw up the towel and the white flag, and I'm done. That'll fuel that last leg up of this fifth wave move, the bigger move, and then that would put us making the market very vulnerable, as there are no more buyers to push this market up, and no more short sellers taking pot shots at the at highs. So that's what I'm looking for. Now, scenario 2 is, right, we always got to have another scenario, is that we just continue to go up and go up and up, and with low volume, which is huge red flag for me. And volume does matter. It doesn't matter if you don't think it matters, because volume's been non-existent for years. It does matter, guys. It just it's another gauge, and it just confirms what price is doing. When you have no oomph behind the move and you have no volume, you could tell that it's all retail buying this market up. Okay, the Jim Cramers and the Nigerians and the fast money guys and everybody saying buy the market, it's healthy, it's great. At 24 times PE, it's out of control. I'm talking now for the more, not the day trader, but for the long-term swing trader or the investor. You do not want to be adding to positions. It eventually will come in, whether it be next week, a month, even April or May. It's going to come in, and you want to get a good average price when you add. You don't want to chase up here, okay? So anyway, that's what I'm looking for. I think we tag it, maybe run up the rails here, and then get to like 238, and then that would be pretty much solidify somewhere this move. And again, scenario 2 would be we just go right up with no pullback. That's even more dangerous because there's not even a pullback to shake out any of the weak longs. Now you have a ton of longs up here at the highs. You know, buyers are higher. I mean, and sellers are lower. It's so funny, but that's true. All right, so that's why we have to be careful here. We took out of this bull flag. We broke out 2 days below it. We're going to confirm it tomorrow that we take out the high, this local swing high. That'll get us long IWM. But again, be prudent. IWM is extremely overvalued, overbought. Again, not a sell signal, but I wouldn't touch it. I do think that the IWM is going to be a great trade in 2017, but not here, not now, not at these highs. Okay. Next is going to be the IYT. Looking really good, constructively bullish. But again, we have now a double top forming that we're testing the double top. Let's see if we start to roll over again. It is our leader, so we need to pay attention to this closely. And last is going to be your Qs. It's funny. I mean, some Qs are also heavily weighted in biotechs as well. But the Facebooks didn't really do too much. Apple was up a little bit. Amazon was up big and then started to roll over. Baba, same thing. Keep an eye on the semiconductors. I was looking at the SOX index and the XLK. They're very vulnerable for market pullbacks. All right, so keep an eye on them. That may be the next short trade setup. Excuse me. Be careful out there. Use your stops. We'll see you tomorrow. Take care, everybody.